Welcome back to the final round on Yahoo Finance. I'm Seana Smith. Taking a look at the market action today, selling pressure across the board. We have the Dow on track to close off just around 550 points. This is the biggest decliner of the three major averages today. The S&P also under a tremendous amount of pressure, off over 1%. And the NASDAQ weathering the sell-off the best, off just around 0.2%. And that does it for the first trading day of the week. And again, the week getting off to a rough start. When you take a look at the Dow, the S&P, and the NASDAQ, all three of the major averages closing in the red, although we are well off the lows of the day. The Dow closing off just over 500 points, S&P off just around 1%, and the NASDAQ off about 0.1%. Digging into the major averages here, in the Dow, some of the worst performers coming from the industrials and the materials space. 3M, Dow Inc., and Caterpillar amongst the biggest decliners there. We have the S&P dropping below 3,300 today, and again, the NASDAQ weathering this sell-off the best of the three major averages. It seems like we're seeing this broadening out of the correction that started a couple of weeks ago, losing a little bit of traction in that cyclical trade. A couple of things I think weighing on the markets today: the headwinds down in DC, delays on stimulus, the election season coming into focus, and then of course the rising tensions with China signals that Beijing is going to step up retaliatory measures. So those are a couple of headlines out of DC that investors are digesting today. And then of course the renewed threat of lockdowns, investors closely watching what's going on in Europe and what could potentially happen here in the US over the coming months. The VIX today jumping to its highest level in weeks, rising above 30. That's a level I think that got a lot of investors' attention today. Taking a look at that sector action, again, broad-based selling across the board. Banks and financials among the worst performers. Of course, we had that story out about suspicious trading activity, putting the sector really under pressure. HSBC and Deutsche Bank, two overseas banks, off pretty substantially today. Deutsche Bank off just around 8%, HSBC off just around 6%. Here in the US, the big US banks, Citi off just around 2.5%, JP Morgan off more than 3%, as well as Bank of America. So some pressure there in the financials sector. Of course, the possible shutdowns, the climbing number of cases, hurting that reopening trade, cruise lines, airlines, REITs, casinos, among the big decliners today. And then healthcare, we have J&J, Amgen, and United Health in the red today, the future of the Affordable Care Act in question. So that, of course, is putting pressure on the healthcare sector. But I want to bring in my co-host, Myles Udland. He's still with us. And for the next hour, we have Yahoo Finance Editor-in-Chief Andy Serwer. We're also joined by Rick Newman and Jared Blickery. Myles, let me kick it over to you first. Well off the lows of the day, but still the fourth week in a row that we're seeing pretty substantial declines.
Yeah, I mean, I think, off the lows is a great way to frame it if you want to be bullish. I think, Jared will probably walk us through what we saw in the tech names, the leadership group that was a leadership group on the downside over the last couple of weeks. And I think there is a positive story to tell there, but it is certainly just worth acknowledging that we are now in a new phase for markets. Who knows how long it lasts? Maybe we are at the tail end of that phase. But after everything was up and to the right all the time, volatility getting squeezed out of the market July into August, we're now in a different phase. And again, VIX settling under 30 today looks like that's certainly a positive development, but we were talking about the VIX under 20 not too long ago. So again, certainly digesting what this regime change means for markets more broadly, but I think it is still kind of worth looking at individual kind of sectors on an individual day basis, and to see the sell-off broadening maybe is a sign that this is the end of the phase, right? We talked last week about how the index went down as the big names sold off and the cyclicals that were been lagging were going up. Well, now maybe it's time for the tech stocks to pick it up once again, take the market higher as these cyclicals get sold off. I see Andy Serwer nodding his head in the side of the screen. And so, I mean, again, I think it's always, as we say time and time again, worth keeping an open mind about what is happening in the market. But a new phase is certainly here. Just it remains to be seen how we kind of resolve it. And I think maybe today I got a suggestion of what the future looks like.
Well, Andy, let's get your reaction. We mentioned you there at the top. I know you were nodding your head during what Myles was just talking about. And I like the positive spin that Myles put on. And we have to keep an open mind just in terms of some of the action that we've been seeing over the last couple of weeks. But what do you make of it? The fact that we are seeing downward pressure across the board today, all 11 of the sectors closing in the red, yet the NASDAQ, the big tech names, have been able to weather today's downturn at least better than the broader market.
Well, first of all, Seana, when Myles speaks, I'm always nodding my head. So, I'm like a bobblehead when he's going on. No, I very much agree, Myles, when you're talking about, and you too, Sean, like that it broadened out to the upside, and now they're going down. It broadened out to the downside. Now we're flipping because the market leaders are in the green today, which is why the NASDAQ was barely down at all. And in fact, Amazon, Apple, and Microsoft were all up. Microsoft had a nice deal today with their Sony killing deal. So that was nice. But if you're an Apple or an Amazon shareholder, why are you going to sell? And if you're in this thing for the long haul, it's right. And then even more than that, to your point, you guys, if you're looking at Amazon, you wanted to get in. Amazon was trading at $3,500. It's now $2,900, right? So I'm not a sucker like the $3,500 people are. So maybe you want to get in at this point. So, and with those stocks, it's really, buy on the dips has really worked, and it's not always going to work. But it sure has for those names. For the FANG, you can't pronounce that. Did I tell you when I was talking to Reed Hastings? Very interesting. He didn't say FANG. He said FANG, which is replacing the N, which is his company Netflix, because he doesn't want to be lumped with them, with the M of Microsoft. Mm-hmm. Now, he's actually right, because Microsoft is actually much more of a cohort with those companies than Netflix is. Netflix is very different. It's not an ecosystem company the way the rest of them are, or as big even. But Reed, it's much harder to say. In fact, I still can't say it, Seana. Can you say it?
Bang. No, it doesn't really roll off the tongue.
No. Well, FANG, yeah, right, exactly. Anyway, so just two interesting stocks that you want to highlight, and I think you alluded to them a little bit, was UNH, and I just want to pat myself because I said this morning, watch UNH on the call because of the ACA thing with RBG, calling that into question. And our own Aaron Fuchs, by the way, wrote a story about another business angle with RBG's passing, which is the Google Oracle litigation could well be affected by that. So that's an interesting thing to look at. As if Oracle doesn't have enough on its plate, Larry Ellison and Safra Katz. We'll get into that a little bit. And then the other one was Zoom. The reason the market was down overall still was because of COVID fears. Yes, that coming out of Europe, more lockdowns, maybe coming here. And so people think, Zoom use is going to go back up. So that's why Zoom was up a lot today.